Well, the good news is 54,000 jobs lost in August, a lot better than expected. Sean Tully, is there bad news in this? Tell us the bad news.
Well, the bad news clearly is that we did have a net job loss and that the increase in the labor force is too great to be compensated for by an increase in job creation. So the unemployment rate went up to 9.6%. But the good news is that we're now seeing more positive job creation in the private sector, and it's making up for, more than making up for, which is what's really interesting about this report, the loss of jobs, mainly through the loss of census jobs in the public sector.
Right. Private sector was around more than 60,000 jobs were added, and I think the estimate was something like 41,000 jobs. So that's a big uptick.
Yeah, mining, we see the prices of gold and a lot of other mining products, and clearly there are a lot of jobs in the mining sector that's been a big area of increase. In the healthcare sector, we all know that healthcare spending is soaring. That has increased substantially. So the private sector is finally taking over. We saw cuts in private sector jobs, the likes of which we haven't seen since the early 80s, starting in late 2008 through most of 2009. Companies cut as if a depression were coming. The depression didn't come, but they never hired people back, except in the first couple of months of 2010. So eventually, these companies are going to have to start hiring again. They're running too lean. They have lots of cash. As growth rates pick up, which I think that they will, because of the monetary stimulus chiefly, not the fiscal stimulus, which is really just shifting money around, I think that we will see higher growth rates, and companies are just running too lean. And their profits are very high.
Right, but one other issue is, this is a good number, but we are still very far away from the 100 to 200,000 jobs that need to be added every month in a normal environment, to say nothing of what needs to happen for the unemployment rate to edge down to even make a dent in it. So we're still far away from that. I think if anything, we are seeing maybe we're coming out of this past 3 months, which everything has been so dismal since May, basically, if you look at the jobs reports. And, earlier in the quarter, earlier in the year, as you mentioned, we were adding jobs at a faster pace. That stopped, and maybe now we're moving back towards that level.
Yeah, what's really surprising about this downturn is we had severely negative growth rates for a number of quarters. And when you have that type of recession, you tend to have very sharp growth rates coming out of it in the 6, 7, 8% real growth range. We are now growing at less than 2%, which is clearly not nearly enough to make up for growth in the labor force. And we need to come out of this much, much more sharply. When you look at the recovery that started in the early 80s, the growth rates were 3 or 4 times what they are now. And that's what we need to get back to. And potentially we could get back to those kind of growth rates, but there's a lack of confidence, especially among small businesses. Half small business income is taxed on personal tax returns, and those rates potentially, we don't know because there's a lot of uncertainty about it, and uncertainty is not good, are going up potentially by almost 5 points.
Right.
Healthcare costs for small companies. If you don't insure your employees and you have over 50 employees, you have to pay a $2,000 a year per employee fine for not providing insurance, or you have to provide insurance. Those costs, those potential costs, are holding companies back from hiring because the money that would go into extra jobs now is being preserved for the fear that they're going to have to be spent on higher tax rates and higher healthcare costs.